Kia ora and welcome to Shared Lunch, brought to you by Sharesies with BusinessDesk. My name is Helen Mattison and I look after news and communications here at Sharesies. But before we get started, here's some important information.
Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording.
Today we're joined by Terry Thomas, who's the Managing Director of breast cancer screening company Volpara Health, which is listed on the Australian Stock Exchange. Welcome, Terry.
Thank you very much, Helen, and kia ora.
Now let's start with some basics, as in reminding ourselves what Volpara Health does.
Sure. Volpara Health makes software to save families from cancer. Now, sometimes it's helpful to share what Valpara doesn't do to make it all clear, because I often hear people say, I went in and had a mammogram and I didn't see Valpara listed anywhere. So you won't see our name on any mammography equipment. We don't actually make any of the equipment. We provide the information and workflow support to make the jobs of the people who use the equipment better and help them do a better job for their patients. So our main applications include a comprehensive risk assessment, which helps determine if an individual person is at risk of getting breast or other cancers. About 3 million patients in the U.S. have their breast cancer risk assessed by Valpara each year. About 20% of those 3 million, so around 600,000, will be identified as high risk for cancer at some point in their lives and be identified for some additional imaging or genetic testing with the goal of catching cancer earlier, starting a preventative strategy, and ensuring that we can either prevent or catch it real soon for those that are at high risk. In addition to that risk assessment, we also provide an AI analysis of mammography images, which are a type of X-ray of the breast. And we characterize that breast X-ray into what kind of density that breast has. It's an objective, precise, physics-based, volumetric assessment of that tissue, which feeds into the risk models. A lot of people don't know that when you have higher density in your breast, then you're a higher risk of having cancer, also a higher risk of that cancer not being seen in a screening mammogram.
How about we actually jump into where you're at with Microsoft? I know a while back you actually entered into a collaboration with them. Obviously, they're huge at the moment in terms of AI and various other things. Can you give us an update on that?
Oh, absolutely. We love our partnership with Microsoft. We build our software on Azure technology, and there are a number of ways that we've worked with them. I feel like they've really gone above and beyond with us to an extent that surprises me. We did an AI collaboration in Australia maybe 6 months ago, but the thing that was, I think, most interesting and exciting for us is the work we've done on breast arterial calcifications. This concept, the BAC, is they call it an incidental finding. So when a woman goes in and gets a mammogram and they're looking for breast cancer in the breast tissue, they can also see if the arteries are calcified and it's a risk of heart disease. And I personally believe if there's something else we can insight about a woman based on that imaging, we're obligated to tell them about it. And the biggest reason that people haven't done much with breast arterial calcifications is there's not been a good science for how to measure and quantify and articulate what they are and what it means. And so Microsoft sent a team of people to Valpara to sit down with us and work through creating an algorithm to be able to quantify and measure those arterial calcifications. And that algorithm has been validated, refined, and it's in the hands of researchers right now. The other thing that Microsoft did, though, is they brought some really great processes. So they've got some discipline and they've got just ways of working that our development team absolutely ate up. So we've done great work with that. And now we're looking with them on, are there AI-related collaborations? So we've talked with them about Microsoft Cloud for Healthcare, the Nuance Precision Imaging Network, and we're working with them on a couple different ideas of things that we could potentially work together on a development and be able to offer to the market as a next step.
Lots of potential. Now let's jump into the AI algorithm that you use, just to unpack that a little for some of us who are slightly non-techie. In terms of AI not being about ChatGPT, AI has been around in healthcare for quite some time, so perhaps just understanding its involvement.
Yeah, it's funny. AI has actually been in healthcare for over 20 years, and the vast majority of the AI algorithms approved for use in healthcare are within radiology. So AI in radiology is not new at all. However, people are looking at it quite differently. I've even noticed in 2 years, when I've talked with people about how AI can make an impact on what they do, in mammography particularly, I heard radiologists do this kind of eye roll. Oh, they say it's going to replace me and it'll never replace me. And it's just another little piece of information for me to decide what to do. To now, seeing it in an entirely different light to solve real world problems in an area where there are not enough radiologists and not enough technologists. So the things that I think are most interesting are looking at taking all of the information that we have and then looking at solving workflow problems, which is part of what ChatGPT brought, where we started looking at AI differently as something that can actually solve problems right in front of you. So, for example, instead of AI taking over reading every mammogram, AI can categorize the mammograms, and these are the most normal of the normal with top quality, and we don't see anything wacky here. Does this even need to be read, or do you read this just after lunch when it's your lull? Or is this a new person who's going to read it? Or in Australia or the UK or Europe, where typically you have one radiologist read an image, a separate radiologist read an image, then if they disagree, a third radiologist reads the image. Switching to some really cool findings on one radiologist and AI, and you don't pull in a second radiologist unless they disagree. So all of a sudden, people are seeing this not as a threat, but as a supportive productivity tool.
When will that commercialization actually be a reality, do you think? I mean, it sounds incredible.
Yes, it is exciting. So the AI that we do is deep image analysis of the density, but then we also characterize the quality of a mammogram to see, is the chest wall visible? Is the nipple in profile? Is the dosage right? Is the compression right? Is this person holding still? Is it a good enough image for someone to be able to read? So, and then we pull together AI from other sources as well so that we can provide a scorecard that shows here are all the characteristics of this image, the density, and here's what ScreenPoint might say or iCAD might say in terms of other vendors that are trying to articulate exactly what does this spot mean. So we now have seen the first vendor actually apply for autonomous AI, meaning an image could go all the way through without a radiologist looking at it for FDA. Now, it's not been approved yet, so they're evaluating it. And there's some thorny issues to sort out, like who's liable if it misses something. But what I found fascinating is 2 years ago, I heard, you know what, that'll never happen. You always need a radiologist. They need to hold the liability. And last November, what I heard is the reality is doctors miss cancers too. It has to be as good as doctors or better, but not perfect. And then when you add AI and a radiologist, it performs better than either one on its own. So it's definitely coming. And Valpara is paying a lot of attention because we think there's some things that we can provide that nobody else can. So stay tuned.
Terry, you came on the scene just over a year now with Volpara Health. You had an involvement prior to that with the company. Tell us about why you got involved and also what your expertise is, what your career has led you to, and what you bring to this company.
I would say more than anything, Valpara's purpose is what drew me to Valpara. However, there was some serendipity in me meeting Valpara. So my background is in health technology, working for electronic medical record company Epic for over 20 years. And it's a global healthcare provider. It's a multi-billion-dollar private company that has implementations. Over 30% of the hospitals and clinics in the US use Epic. I was given a 20-year thank you of a sabbatical to anywhere in the world. And my team told me I would love love New Zealand. And they were right. I absolutely love New Zealand. Came here, found it a great place for my kids to grow up, and picked up and moved. And when I moved to New Zealand, I did work for Orion Health in Auckland, and I helped them with delisting from the NZX and selling the Rhapsody product line. And then I went from that to getting a master's in nursing in New Zealand. And as part of that process, the head of people for Valpara used to work for me at Orion and asked me to help consult with Valpara is considering an acquisition of CRA Health, which brought our risk business line in. And I found that it's a really unique company. And I did a little bit less nursing and a little more consulting and a little less nursing and more consulting. And after a year and a half of that, they asked me to be CEO and to bring some very commercial elements to the business.
That's a good segue into what you did when you first came on board, and that was a strategic review. There's been a fair bit of change, quite a bit of cost cutting. I think 20 people were laid off. Perhaps talk us through why those big changes had to happen, and perhaps the key ones. So what difference are you making?
Yeah, I came in and I assessed the company and looked for opportunities to be able to improve the overall health of the company. And what was going on in the market at that point, there was a lot more focus on profitability, but I thought that was actually supportive of what I would have wanted to do with Valpara anyhow. Valpara had grown by acquiring MRS, Mammography Reporting System. That's a workflow management and reporting product, as well as CRA Health, our risk pathways product. But the company hadn't really fully integrated those businesses into one company. So coming in and assessing opportunities to drive profitability and growth allowed us to be able to look carefully at our operations, providing some automation into areas like quality assurance, one marketing team instead of several marketing teams, one sales team who is selling multiple products instead of product specialized sales teams alongside each other, sometimes calling on the same type of client. So in general, I saw a number of opportunities for us to focus our efforts in ways that would support a drive to profitability, save some of our costs, and focus.
That's a nice segue, Terry, into the full year results for 2023. Perhaps if we look at the highlights, I see that revenue has risen, but you're also talking about 2 quarters of cash flow break even, which will be a joy to many investors, I'm sure, and also the promise of profitability down the track. But perhaps let's unwrap the main numbers.
Probably one of our biggest assets is strong revenue growth. So 34% year on year, 35 million, excellent gross margins. Us being a software company, a technology firm, 92.5% gross margin, I think is really healthy. Our cost base increased only marginally, less than 1%. And in this inflationary environment, that's pretty solid and something that we anticipate we can keep relatively flat going forward. Enormous improvement in our EBITDA. And as you mentioned, we had signaled that we would go for cash flow positive a year ahead of when we actually hit our first 2 cash flow positive quarters. So we're ahead of track in the guidance that we've given. And for the first time, actually putting in guidance for EBITDA cash flow or EBITDA positive and continuing revenue growth of 20%. With our guidance of 40 to 42 million. So we did exactly what we said we were going to do and a bit ahead of schedule on our execution.
What about cost cutting? Has that actually, you've done what you needed to do? Would that continue? I mean, it's obviously something you'll always watch.
I do believe in hiring slowly, leveraging technology, cross-training. We also spent a lot of the last year in technical integration of our software so that customers that buy one piece of software would be more likely to add additional software from us. versus one of our competitors. So we were careful to preserve the majority of our sales team, the majority of our marketing team, but rework that marketing team into one cohesive team instead of separate teams that were product focused. We built a new customer success team, a new customer community, because again, as a SaaS company and also as a certified B Corp, we're cutting down how much time we get people on planes for face-to-face meetings and leveraging technology, posting webinars, putting together ways for our customers to help themselves as really good business practices to allow us to grow and allow us to scale as a profitable company going forward. So we feel comfortable we've trimmed enough, and we do have a couple open positions, but we're real careful about bringing people on.
Now, Terry, let's jump into the markets that Volpara services. I see from your presentation for the full year results, around about 95% of revenue comes from the US, although I think you're in about 41 countries. Mm-hmm. How does that work then? Is there more potential in the US, and will that be your focus, or are you thinking of other markets that could also grow to a reasonable size?
Yep. As part of our strategic review, we actually pulled out of a few markets. We've done a pretty careful analysis, and in everything we do day to day, we calculate the ROI. So certain markets were not paying very much for the software, but still had a lot of overhead associated with the sales, security reviews, regulatory requirements. And so certain parts of Asia, we actually ended some reseller agreements and exited from those. However, the United States is the most lucrative market for health technology in the world. They spend more on healthcare and more on healthcare technology, but they're also quite progressive as it relates to being leaders globally on cancer prevention and cancer detection. We're actually a founding member of Cancer X and working with other researchers in the United States, as well as some in Europe and globally, to just make sure that we can be at the table in those that are figuring out new policies and new screening mechanisms, and really any way to be able to improve the work that we do for our customers' patients. But US will remain our biggest market in the shorter term. I will share, though, we've had great progress in Australia and being an ASX listed company. Australia's largest private radiology provider, IMED, they're following the lead of the United States Food and Drug Administration, requiring all of its radiologists to provide density notification with their mammography reports in Australia. So Australia is strong. Europe is quite interesting for us right now. It's one of those areas where they've been slow to adopt the cloud, and yet there are some really, really strong global movers and shakers in breast screening. The biggest challenge had been in Europe, the cost of follow-on screening. So you can get someone in for a mammogram, you can identify them as high risk. And as we found from the 10-year DENSE trial in the Netherlands, you can actually make a significant impact if you can get women with dense breasts screened by MRI, a 50% reduction in interval cancers, meaning that reduction between when they had their mammogram and when that cancer was found. So a huge, huge impact in terms of identifying cancer early and reducing false positives. But the challenge is availability and cost of MRI equipment. So as we work with folks like in Norway, they're going through, they've done a really cool study, the mammography density in interval cancers and mammographic screening, moving towards personalized screening, picking the top 3% with most dense breasts. And can they get them special care and special treatment? And that helps with areas where MRI is scarce or accessibility is really challenging.
We've talked about the US being a big market, Europe, there's potential, Australia's doing quite well, but I understand that New Zealand is a bit of a laggard.
That is correct. It's really sad to us because this is our headquarters. You know, we're based in Wellington. We're listed on the ASX. We've got about half of our staff in the United States and a handful in Europe. But yet, it's a lot of our staff and their mothers and wives and sisters that are getting mammogram screening in New Zealand and not being told of their density. I've talked with some of the Breast Screen Aotearoa folks, and we're advocating with other government entities, the focus has really been on just getting people in. And it's been to me, honestly, kind of appalling lack of focus on what is the quality of the mammogram and informing women about breast density. The materials that the ministry provides are somewhat conflicting, that they said that, well, we understand breast density, there's some data out there, but we need more data. But yet in some of the other materials, they acknowledge that there is data about the importance of breast density, and yet they're really working to targets of just getting women in. And it's misleading to me if someone with really dense breasts comes in and they're simply told their mammogram is normal, when there's a significant chance that there actually could be cancer there and they're not aware. I feel like we're doing a disservice to the women here.
What's the breast cancer stats, say, for Australia, New Zealand, the US? I mean, how are we faring in combating and realising this disease, is a big killer?
Well, between 1 in 7 women in Australia, or one in 7 women in Australia will be told at some point that they have breast cancer. Now, the Australia response, though, is actually quite strong. Over 90% of the women with breast cancer, it's caught early enough that the 5-year survival rate is pretty strong. So Australia is actually pretty good globally in managing women with breast cancer. I don't know off the top of my head what the statistics are in New Zealand, although I don't believe it's as strong as Australia.
Looking at the company again, you listed back in 2016. Obviously, the share price has been up and down, as a lot of biotech or medtech, as in your space, companies have experienced. Most CEOs hate answering questions about the share price, and you do have continuous disclosure to think about, obviously. But what could you tell investors about where you'd hope the share price to be, or what you're hoping will happen to it, given that you are talking about possible break-even soon?
Yes. I look at it's been a rough year for a lot of companies like us. And would I say I love where our share price is? Not quite yet. I do think that there's some significant potential growth to our share price, potentially because we are demonstrating top-line revenue growth with paying customers, being that, really on the brink of profitability with strong differentiators, sticky software, high profit margin, low churn, good scientific validation. But even just the tailwinds that I mentioned about what's happening with the FDA, there are a number of governing bodies that are now, like, for example, the National Accreditation Program for Breast Centers will require a risk assessment to be done in order to maintain accreditation. Like, these elements are happening in the industry to drive organizations to buy software like what we have. And we have some really strong differentiation compared to the other vendors out there in that we own volumetric density. We've got the most comprehensive analytics and quality program out there, and we can pull all of the pieces together in a way nobody else can do. So from my perspective, and then when I look at the growth in the AI direction and some of the new product things that we're doing, I fully expect that our balance of purpose and profit, together with that focus and alignment with the commercials and taking advantage of some of the tailwinds in the industry, should drive our share price up. But yet you never know. Some of it relates to what's happening with everyone else. I will add one last thing related to that. I do sometimes have people ask, well, wait a minute, fears of a recession, banking crisis, nobody wants to invest in growth stocks. Everybody's locking down on what's really super safe and predictable. But I will remind everyone that even during the financial crisis in 2007, 2008, healthcare and healthcare technology actually did pretty well. People still get sick, and sadly, people get cancer even more during a financial crisis. And so the number of jobs and the spend in healthcare technology actually went up during that time when other industries were really hurting. So I feel like we're positioned as a company to continue our growth. We're being fairly conservative in what we commit to the market because we want to build trust. And we want everyone to know if we say we're going to do it, you can count on it. And that's what we've demonstrated in the last 12 months.
You probably need to do that because it is still a very competitive space in the biotech or medtech arena. I mean, there are so many companies wanting investor money, needing the capital for research and the like. But as you say, if you've got some unique characteristics, that may help.
Yep. And we've crossed the chasm in the US as well. 40%, or actually 42%, of the screening mammograms in the United States touch at least one piece of our software, one of our products. But the cool thing is 76% of our customers have only one product. So that means we are established, but we've also got a really nice base for cross-selling. And the investment that we've done to integrate our systems, our marketing, our sales, and our products should be a nice foundation for continued and really good, predictable SaaS growth as well.
We're coming to the end of our conversation, Terry. We could probably go on all day, but we do need to finish. If there was one key takeaway for investors from our conversation, what would that be?
You know, I'm honored to be able to lead a company that is very grounded in a purpose of saving families from cancer. As a certified B Corporation, those of you that are interested in impact investments or responsible investing, we would welcome you to take a look at Valpara. I believe that we're a company that really focuses on doing good.
Thanks for tuning in, everybody. And thanks especially to Terry Thomas for joining us. We really appreciate your time and your insights.
No problem. I enjoyed it. Thanks.